Hey everyone, and welcome to this explainer. If you're a focused learner wanting to cut through the noise and really understand how top-tier companies pull off massive corporate pivots, well, you're in exactly the right place. Today, we're unpacking the H1 2026 results for MEGP International. We're going to bypass all the usual corporate jargon and just get straight to the heart of a truly fascinating story of strategic transformation. Right off the bat, I want to hook you with the central question of corporate survival that's staring us right in the face here. How exactly does a legacy company, one that's famous for those classic flash-in-the-pan photo booths, adopt and actually thrive in an increasingly unpredictable modern world? It's your classic innovator's dilemma, and honestly, the way MEGP is answering it is nothing short of a masterclass in strategic evolution. To really get what's happening, we first need to visually ground ourselves in MEGP's striking physical presence today. Notice this Revolution launderette operating brilliantly into the night. It gives a massive hint at the shift we're about to explore. They're actively moving away from relying purely on, occasional photo printing, and they're leaning heavily into essential, automated 24/7 services, specifically the highly lucrative world of automated laundry. Okay, let's dive into this. That sunset glow over autonomous machines serving everyday needs, that really represents the core narrative of MEGP's strategy right now. They are building an absolute powerhouse of recurring operational revenue. It's a complete shift from simply selling equipment to operating a vast automated self-service empire. Section 1, MEGP at a glance. 49,664. That is the total number of vending machines MEGP currently has in operation, spread across 16 different countries. Before we get lost in the hard percentages and profit margins, it is absolutely crucial to anchor the abstract financial data to this massive, concrete physical footprint. This vast network includes their core activities of photo booths and laundry, along with digital printing and food service vending. It's literally the bedrock of their revenue, an engine just running quietly in the background of everyday life. Section 2, H1 2026 Financial Performance. So let's see how that massive footprint translates into the actual numbers for the first half of 2026, which ended on April 30th. Here's your high-level financial snapshot. Total group revenue pretty much held steady, up 0.3% to £154.3 million. But check out that second point. Group EBITDA increased by a very solid 7.1%, pushing their margin up to nearly 37%. Now, you will notice that profit before tax saw a slight decline of 3.8%. Objectively, the source material points out this dip was mainly due to slower than expected revenue growth, a higher depreciation charge of £23.5 million because they are investing heavily in new machines, and the absence of a $1.6 million prior year one-off property gain. But overall, that operational cash engine, the EBITDA, is humming along beautifully. Section 3, the rise of Wash.me. And this brings us to the real meat of the story, the strategic corporate pivot. If we compare Wash.me revenue from the first half of 2022 to the first half of 2026, the trajectory has more than doubled, bringing in £54.8 million. This proves, without a doubt, that their deliberate strategy to aggressively reinvest cash into automated laundry is working. It now makes up over 38% of the entire group's vending revenue. Now, the crucial question is what this top-line growth actually means for the bottom line, right? Back in H1 2022, Wash.me generated $13.2 million in EBITDA. Fast forward to H1 2026, and that number has exploded to $30.7 million. That's a staggering 132.6% surge in profitability from this division. It is crystal clear now. Automated laundry isn't just a side project anymore. It is the absolute engine of profit growth for the entire corporation. And this brilliantly illustrates the new reality of MEGP. Wash.me now makes up a massive 47.0% of the entire group's EBITDA. Let that sink in. Nearly half of their operational profitability is now coming from laundry. It's quite the transformation. They took their core competency, which is operating automated machines in public spaces, and they successfully applied it to a completely different, highly essential consumer need. Section 4, Navigating Market Headwinds. Of course, no corporate journey is without its bumps in the road. And looking at these challenges really shows why the Wash.me pivot was so essential for their stability. The company faced some very real external pressures in the first half of the year. They reported a softening in revenue, mainly in photo booths, during April. This was attributed to the economic ripple effects of the ongoing conflict in the Middle East, which impacted consumer behavior. On top of that, they dealt with regulatory changes regarding ID photos in Germany that dragged down European photo booth revenue, plus a significant 9.1% depreciation of the Japanese yen against the British pound, which heavily impacted their numbers in the Asia-Pacific region. Take a look at the legacy Photomaton booth here. It really represents the division that took the brunt of those headwinds. Because traditional photo booths are so sensitive to regulatory changes and discretionary consumer foot traffic, they definitely felt the pinch in April. But, and here's the key takeaway, because ME Group had proactively shifted so much of their operation toward the essential service of laundry, those Wash ME revenues acted as a powerful buffer, ultimately stabilizing the overall financial health of the group. Section 5. Regional Performance Breakdown. So, where exactly is this strategic pivot playing out across the globe? This regional breakdown makes it super clear. Continental Europe remains the absolute titan, housing over 28,000 units and generating 67.1% of total group revenue. But look closer at the UK and Republic of Ireland. It's a smaller footprint with about 6,700 units, sure, but it is a massive growth engine for laundry right now. Wash ME revenue in the UK and Ireland surged by an incredible 24.5%. Meanwhile, as we just touched on, the Asia-Pacific region saw decreased total revenue, though that was heavily masked by that yen depreciation. A huge part of this regional success comes down to who they are partnering with. These major B2B partnerships totally validate ME Group's aggressive expansion strategy. They secured their largest ever single client deal with Asda over in the UK, which is going to be a massive catalyst for new machine installations. And in France, they secured multi-year contract renewals with giant transport networks like SNCF and RATP. These long-standing site partnerships are quite literally the real estate foundation of their entire vending empire. And they are actively placing machines on that real estate at a really rapid clip. In just the first 6 months of the year, they installed 499 net new laundry machines. And they definitely aren't stopping there. They're fully on track to hit a massive target of approximately 1,300 new installations for the full fiscal year. Every single one of these outdoor machines is a brand new 24/7 revenue stream coming online. Section 6. Shareholder Returns and Outlook. All right, let's bring it all back to the investor. What does this strong operational cash flow, driven by this Wash Me pivot, actually mean for the people who own a piece of Me Group? Well, it translates into very direct, tangible payoffs. First up, the board announced an interim dividend of 3.60 pence per share. That's going to return a total of $13.5 million directly to shareholders. Furthermore, they launched a share buyback program back in March for up to $18 million, and as of the latest update, they've already spent $4.5 million acquiring shares. They are actively using the cash generated from their automated laundry and legacy machines to reward investors. Which finally brings us to their forward-looking stability. Despite all those global storms we mentioned, the regulatory changes, the currency fluctuations, the success of their transformation means financial expectations remain incredibly solid. They are firmly on track to meet the revised full-year 2026 expectations, projecting a profit before tax in a very healthy range of $69 million to $74 million. The pivot, for sure, is working. We've seen how ME Group took the simple concept of an automated photo booth and completely evolved it into a multinational automated laundry empire, fundamentally transforming their profitability along the way. It leaves us with a really provocative thought to wrap up this explainer. As automated services just continue to expand and find homes in supermarket parking lots and train stations all over the place, what everyday, tedious task do you think will be revolutionized by self-service retail next? Thank you so much for joining me to unpack these fascinating results. Keep learning, and I'll catch you next time.